what happens? If 300 homes burn down, what would it take to rebuild that house? The contractor goes, to the highest bidder, I will build your house first, right? Highest bidder. Oh, and by the way, material costs just went up because everybody needs to build their house, right? When Katrina happened, $25 per drywall. When Katrina happened, $75. There was a jump. So that extended replacement cost was so important for the homeowners, okay? So we got to look at that. Now, special personal property, that is really more if you need higher coverage for your jewelry and stuff like that. You know, this might be like $10, but maybe I have a jewelry that is maybe $5,000 above the regular limits, then you want to schedule a personal property, okay? So if you have a $10,000 ring, you might want to think about it. This water backup, a lot of people don't think anything about. You should think about it if you have older homes. Silicon Valley usually has older homes, right? They're 1960, 1970, maybe 1910. This water backup is about sewer backup or plumbing or drain backup and stuff like that. Guess what? You have a house that's 1960. How many times someone flushed a toilet bowl? Over the years. Who in the heck knew what the owner before them did? Who the heck knows, right? So this becomes very important. Maybe a new house, not such a big deal, but an older home, it's important, right? Because when an overflow happens from your shower to your bathtub, whatever it might be, maybe 10,000, 25,000. You have good wood, nice hardwood floors, that's even worse, right? So those are kind of the three that I think that are important on home insurance.
Very informative. Thank you so much, Michelle. And on to Keith. We're looking at some sort of electrical schematic here.
Yeah, who doesn't like electricity, right? Nobody. So I represent Home Warranty, but Home Warranty is not really an insurance product, but we are governed by the Insurance Commissioner of the state of California. In this state, multiple other states have their own insurance commissioner. So it's actually a service contract. So Home Warranties, God bless you. Home Warranties, they step in obviously to help mitigate loss after close of escrow, to make sure they step in to actually keep everybody out of hot water as much as possible, especially when you don't have hot water, because that's what you definitely want. So Home Warranty is going to step in and help mitigate that cost expense. So I'm sure, how much are houses going for in the Bay Area right now? About 250,000? 250,000? Well, what year is this? This is 1999? Okay, back in 1999, you could buy a house in the Bay Area for 200,000, 250, right? Who knows that? Who was here? And nowadays, you know, you're having buyers even at the low end spending over $800,000 for that same house, right? Built in the 60s, 50s, 40s. So unfortunately, that house isn't getting any younger, but we're still selling that house. We're selling it at premium, and then they're usually cash poor after they close, even though they have great lenders. They have people come in and get them the money that they need to acquire that property. And as you said, the seller wants $800,000 for it. Rebuilding it might only cost $500,000, $400,000 to rebuild it. But what about if just little things break down? Water heater stops working. Okay, that could be a $3,000, $2,000, depending on, again, code upgrades and everything else that needs to be done. So all those things can kind of take place after close of escrow, and if you have a home warranty in place, that helps mitigate that loss. So they pay a small copay, and then they usually get that item covered, depending on what kind of coverage they select. Now, as you can see from this screenshot here, this is in around 1925 was when electricity started getting indoctrinated in homes, right? Before that, you were lucky if you went to a hotel and things like that would actually have electricity. But homes started becoming very prevalent that they have in 1925 that they actually had electricity. So nowadays when you go in and you make a listing and you take over a property, you're not going in and worrying about how old that electricity is, if it's all belt, tube, and knob, or if it's brand new electricity. You just want to make sure it works, right? And it continues to work. So that's when a home warranty will step in and make sure that it continues to work, at least for the first year after close of escrow. Fair enough?
Fair enough.
All
Thank you, Keith. Very informative. Again, Elizabeth, tell us about company strength, why it's important.
Absolutely. I'm very proud to know that should there be a claim, whether it's a single-family residence or perhaps box sales, or maybe even if you're in the commercial space, there's going to be this strain. Right now, 1.5 billion was recorded as reserves for 2018. Right now, first quarter 2019, it's already higher at 1.7. So, you know, we can all have that peace of mind during our real estate transaction. So, very important. But perhaps you're saying, why would she highlight the company's strength? Because claims can and will occur. On this particular worksheet in your folder, there was only space for 30, but of course, there's a lot more. But these would be the ones that probably would be the most common title problems. Impersonation happens, forged deeds, easements by prescription not discovered by a survey, write-up entry was a recent one, and because close of escrow was 3 days away, who has the time? Seller was not willing to invest time to research that. And title companies, we can do a supplement, but it's our job to make sure that the property is free and clear of any judgments, liens, child support, IRS, anything. That's our job. So of course we will not close to protect you and all the parties involved. So keep this handy because it may come up, or if you like, if it's not at the end of the month, please. We're always happy to have an appointment one-on-one. Maybe perhaps you feel you have a special case. We can address that and discuss it so that there's no surprises. None of us like surprises, correct?
I like surprises.
There's a reason why Fidelity National is a Fortune 200 company. It's because they have people like Elizabeth working for them. So thank you, Elizabeth. Here's something that I don't like talking about because I don't wish it existed, and it's called private mortgage insurance. Private mortgage insurance is something that a lender will, systematically require if there is, for someone who's buying a primary residence, has less than 20% down payment. We all know the 20% down payment rule, right, guys?
Yeah.
All right. So this, again, protects the lender against default. The lender is lending out their own money. Yes, they charge interest. Yes, there are some closing costs involved, but there are some other things that they put out there to protect themselves to make sure that they get paid back that money. It's a big investment. I'm going to call this, though, a semi-optional insurance. It's like everybody should have a homeowner's insurance policy. But this one doesn't necessarily need to be the case. If you have good credit scores, for example, that's one thing that will lower your PMI if you need to have it. If you have good credit history, something over maybe 740 or more, Bank of the West will offer you some different alternatives to having to pay PMI. And let me just give you a case, $1 million, it was a $1 million loan, less than 20% down. It's $423 a month in PMI. Not tax deductible, just straight out of your pocket, just to protect the bank in case you default, which makes it more likely that you're going to default because it's a high bill, right? $423 a month, my goodness. So here's a couple of different alternatives that you can look at with your lender to get away with having to pay that big premium. Number one is lender paid PMI. Let's say that same $1 million loan client was going to get a 30-year fixed at 4%. Well, the lender might say, things are looking good, you have good credit score, we like you, but we're going to increase your rate to 4.25, 4.375 to help cover that difference every month. Okay, then it's easier for you just to maybe refinance once the appraisal value pops up a little bit, so you do have that 20% down. Another good option right now is what's called an 80-10-10 structure. Who knows 80-10-10? I see a few people, wonderful. So 80%, that magical number, which is 20% down, and instead of having that 20% down payment, you just split it into two different parts. You put 10% down payment, and the other 10 would go on a home equity line of credit, usually variable, so you can't lock it up for 30 years. The interest rate is usually higher, but that magical system leaves that 80% loan alone to allow you to have the lower interest rate, market interest rate. And with a lot of the people, in the Bay Area, maybe they have RSU income or big bonuses or money coming in from this, that, and the other thing. They can just use that money to attack, if this is the highest interest rate, loan that they have, attack that 10% home equity line. pay it down. It's usually interest only, so if you pay it off half, all of a sudden your payment is now half. Pay it off all the way, and once you pay it off, it's still a revolving line of credit. So if you did kind of pay extra everything that you had in your savings, you can still draw from that home equity line of credit. It does help you out. So there are alternatives to this semi-optional insurance. Okay? All right. All right. Michelle Lynn, tell us about condo insurance.
Okay, I want to see how many of you agents actually read the CC&Rs.
Keep your hands down.
How many of you guys read the CC&Rs?
Everybody raise your hand.
Okay.
All 478 pages worth? Are you serious?
Okay. Out of those people who have read the CC&Rs, how many of your insurance agents read the CC&Rs? Huh? None? I read it.
Michelle reads them.
There's a reason why I read them. Okay? This is the reason why you should have your agent read it and also make a phone call. Okay? There are 4 different ways of how we would actually insure a condo. You guys all think, oh, it's just an HO6. That's it. I don't care what it is. It's an HO6. It doesn't work that way. You read the CC&Rs. I've read CC&Rs and I found out that CC&Rs were so old, they didn't even update them. Then the HOA had to go back and redo them. It was 5 years old and they were still giving the old CC&Rs over to the client and the agent. Guess what? We've just told the client, we're going to insure you the wrong way. Okay? So these are the 4 ways in which we would insure. HOA will say in the CC&Rs, we will cover interior and exterior. You don't need an HO6 per se for dwelling, but you do need to cover your personal property and liability, maybe some loss assessments, okay? But they will cover both interior and exterior, okay? Second option, they will cover the exterior studs. Walls in is your responsibility. So that's a traditional HO6, right, that most people think of, which is your kitchen, your floor, your interior walls, any stairs, any fixtures within the stud walls, okay? Interior. Option number 3, upgrades only. The HOA says, I'm going to cover exterior and interior, right? But with the exception of upgrades. So if I bought my condo in 1970 and I upgraded it, right, from tile countertops to granite countertops, because that's in today, right? And I have quartz or whatever, and I put in nice wood floors, that's upgrades. So then I only have to do things that are maybe $50,000 or $75,000 for the upgrades. Option number 4, master HOA basically covers all. Actually, the first one, I apologize. There are, that one is more, you have to cover both interior and exterior. There are some HOAs, and this is very true to attached single-family homes. They still have an HOA, right? But they say, hey, we want you to cover both, you yourself have to cover interior, exterior, even though you're attached to somebody, right? So there are some CC&Rs that do not do any of those coverages. So those are the 4. So why would you tell an insurance agent, hey, I need an HO6, and then they don't read the CC&Rs? You get caught. I had a client that one time called me up and said, you know, Michelle, past 3 years, you've been ripping me off. What? Ripping me off? Yeah, AAA, they're half the price. Thinking to myself, okay, you're CC&Rs, you have an HOA. Why would I do something like that? That's terrible. That'd be terrible for me to do that, rip somebody off. So then, I said, let me look at his report. I said, yeah, this is the reason why. I had highlighted the CC&Rs when he first bought it. I highlighted that he was responsible for interior and exterior. I sent it over to him and I said, oh, did your AAA guy look at your CC&Rs? Do you realize that you're responsible for interior and exterior? What he gave you was only interior, by the way. And he's like, oh my God, Michelle, thank God you saved my skin. My wife would have been mad at me if the house burned down. I was like, there you go. It's because your insurance agents do not read the CC&Rs. CC&Rs have very different dictations for each HOA. So do not assume that it's only stud walls in. It's not correct. So have them read it. Okay, so all the agents, you're gonna read your CC&Rs, right? And then you're gonna tell your client, send the CC&Rs over to the agent. I do one more thing, as I always call the master HOA insurance company, and I double check. I say, hey, I see that it says replacement cost, but I want to know what is it that you're covering. Did something change in the CC&Rs that I don't know? And they'll tell you, hey, yeah, we do only cover the exterior now. We do not cover the interior. It does change every year because your HOA, if you're active, they may decide that something big happened that they're gonna now pull out and only do the exterior, okay? So it's always changing, so don't assume just because you're selling in that condo all the time that it hasn't changed. It can change, okay? So be careful, read your CC&Rs.
Great information, and I will add to that that lenders do look at those CC&Rs, especially when a condo project has not been yet approved on their books. So they will look at everything, the budget, the rent rolls, that, you know, how much is in reserves, as well as the CC&Rs, and to make sure that those, you know, what sort of policy is needed. But don't let that be an excuse for you to be lazy. You should definitely check into it yourself. Work with your your insurance agent to get the right information for your clients.
Can I have a question for Michelle? So is it correct in general, most condo units will be option 2 for interiors because HOA tend to cover most existing?
You can't say, yeah, you can't say that it's typical. It's not typical. With
Still
new
case by
constructions that are coming up, they're doing it very, very different, right? Because they're trying to cater towards millennials, right? Oh, let's just not bother with them. Let's just cover everything. Some of the older HOAs don't do that. They're more traditional, let's get the stud walls in, right? So, but you can never assume that, you know, whenever those years built will dictate and they will change. Because like, again, that scenario, 5 years ago, they changed it. They were like, hey, we'll cover everything. Now that the building's older, they're like, oh, I don't want that responsibility. Let's change it. Let's make them do it, right? So it's always ever changing.
So in the scenario, the change is the HOA covers exterior, and then the owner will be responsible for interior. However, though, the trick is the balcony, not covered by HOA. So the purchase of insurance should cover interior plus balcony. That's how it goes.
Yeah, it just depends. Again, it's really about the HOA, right?
Okay.
What are they willing and not willing to do, right? And so that's why it's important, even for the people who live there, is to constantly upgrade their insurance or have a look through, because they should be reading the minutes,
True.
right?
That's-
Oh, by the way, we've minused out the balcony. And you're like, oh, I don't even have balcony thing. But
Right.
I didn't know because I wasn't reading my minutes.
Right.
So you have to be very proactive and pull it out sometimes and read it.
Great.
Yeah.
Thank you.
The devil is in the details.
Yeah.
There's a lot of details when it's 478 pages of CC&R. Trust me, I've read them before. Just once. Just once, that's it. But they're all different, and they're always like not, the printing is not well, and it's, you know, kind of, it's old copies of these things. And Michelle, tell us a little bit more about condo insurance, dwelling liability, so on and so forth, please.
So the one thing that I want you to really point out, since I've already talked about most of them, does anybody know what loss assessment is? Anybody? Anybody read the CC&Rs? Huh?
Covers where you live, covers where you live in case of loss.
That's loss abuse.
Oh.
Loss assessment. Nobody know? Does the CC&Rs include special assessments?
No.
It says in the CC&Rs that special assessments may be assessed against any unit owner if something happens. Good example, roof rot, right? The rafters are all gone. Does the insurance cover that? It does not. Guess what? It's wear and tear. Regular sun hitting it, rain, water, whatever, it's wear and tear. Insurance will not cover wear and tear. But guess what? We don't have money in the bank because we were not expecting roof rot to happen. Now what? CC&R? Yeah, they will assess a special assessment against everybody in that building. So if we have 100 people living in those units, divide that by 800,000, guess what? We have a special assessment. You just paid your taxes, you just paid your mortgage. Do you have extra money? Uh-oh, what are we gonna do? We go to the policy and we go look for this thing called the loss assessment. It will pay for these special assessments. Because I've had clients that said, I don't want that, Michelle. I'm like, oh my God, it's only 14 bucks. But it's incrementally very teeny. If I go from $14,000 to $25,000 to $50,000, it's incrementally tiny. It's dollars. It's like only a couple bucks. I just told my client, hey, we went from 25,000 to 50,000 the other day. $2. Better than a coffee, right? But she knew that there was an assessment possibly coming along the way. So now what? $2 more, $50,000 coverage, right? So that's very important. For condos, water backup, really important. If we were living in the 88, guess what? Water has no discrimination. Where does it go? It goes everywhere. It goes that way, it goes that way, and it goes down. I had a client that was 4 stories underneath this other guy. He leaked all over everybody. Whoa. Right? That's terrible. So you always have to look at condos as who am I sharing that wall with? How many of them am I sharing with? Sideways, top, maybe it's only 2-story, thank you. Right? So water backup is really important for somebody that is, if you're living on top of somebody. Yeah? So.
I have 2 examples. One for the loss assessment, special assessment. Way back, I had a condo that during the drought, we had water, and every house was assessed water usage. And our building overused the allowance. So each unit was assessed extra to pay for the water usage. And I lived alone at the time. And the family behind me had 2 little kids, and the laundry and the baths, and it's like, oh my gosh, I'm hardly here, and they've got 4 people. It's just a high water usage, right? But everyone had to pay the same amount. And then the backup people above me had put some food down their disposal and clogged up everything, and it clogged my pipes. And I came home from work, and there was water all over my kitchen because their pipe came down, and there was water everywhere. It was just shocking. So those 2 things happened to me.
Yeah. I mean, it's so important. People don't think about these things. These are extra coverages. They're not part of the policy. So you better have an insurance agent that really understands what is that person going to go through. I'm a condo unit owner. I'm not a townhouse. I'm a condo unit owner. It's very different than a townhouse. Because townhouses are typically up and down. You don't have necessarily anyone above you. You only have 2 neighbors on the side of you. And you might not share plumbing with other people, right? In a townhouse. And this is like Rivermark. Typical Rivermark is like that, right? But when you are in the 88, it's different. You are sharing how many stories high, and if, let's just say that guy went on vacation, and it's just leaking, his bathroom's overflowing, oh my goodness, and it's down, 25, and you're 25 people damaged, if not more, right? So those 2, so important.
Thanks again, Michelle. So just so I understand it correctly, when a special assessment comes, that needs to be voted on by the HOA board, correct? Okay. And so if you're part of the HOA board and you know something's coming, you could just get that really quickly, right? Because it has to be voted, and then they have to actually mail everybody out an official notice, right?
Yeah. And it's the official notice that you will give to your insurance carrier. Right, that's the one that you're going to give to your claims adjuster to show proof that there is a special assessment. Okay, so I had a client that went through that claim.
Awesome information, thank you. Keith, I know you've been waiting for a while, buddy. Here you go.
I know, yeah. I'm over here by myself. All right, who likes air conditioning and heating? All right, especially 105 here in the valley. Was it 105 yesterday? 6. Where were you? It's only 105. So again, we take for granted sometimes, what we have available to us. We had gas in our houses since 1919. in electric since 1939, and this is again either electric heating or gas heating. And then, of course, the advent of air conditioning then started kicking in, but it was actually a little bit later with obviously the advances in science and some people that lived in Arizona that said, you know what, it's hot in here and we need to do something about keeping our area cool while we live inside. So we were actually pretty blessed, only 105. How much was it in Arizona yesterday? 115 at least, I'm sure. It's got to be crazy. So one of the big things is that we take for granted that system, but when it breaks down, we definitely don't take it for granted. We're actually replacing a system for a client right now, and it's costing a retail bid $4,800 to take care of that AC unit. So obviously, she's very blessed to have a warranty to take care of that because it's only costing her like $110 with the residual cost factor. But obviously the home warranty is there to kick in and take care of that, because who has $4,800 to kick down for their AC if it goes kabunk tomorrow? Anybody? And who doesn't have AC here in the valley? Oh, Barney doesn't have AC. That's why those burritos are still fresh. 3 days in his car and in his house, because it was all relative. It's all 105. All right, so that's me.
I have a question.
Yes?
I've read lately that Berkeley, they require houses not to have gas. New buildings, you cannot have gas.
Well, so basically new buildings probably that they can't have gas, right?
Or rather, they cannot have gas, they have to have electricity.
Yeah, well,
So I was wondering whether it's going to come to San Jose.
I don't foresee that happening, but you know, it would be irregardless. That's usually just for new builds. Typically, they don't make everybody convert over unless they have a huge power crisis of some means that they have to mandate it across the board. But usually, everything that's retroactive and things like that, it would have to be because of a huge, concern for everybody. You know, just like the whole Freon thing. I'm sure you guys are familiar with in 2020.
Yes.
You know, basically, again, that's when Freon is becoming obsolete. So that's one thing to kind of keep in mind, especially talking about air conditioning. Even if it's an outdated system, they're not going to make you change it when you sell the house. If it stops working and is not repairable, you can only put in a brand new Puron system, but you can't put in an old Freon system, you know, because those aren't available anymore. But it won't really affect, and again, what Berkeley has for their brand new laws, that's usually for new builds. Did you have a question about?
Yes, on a personal level, this just happened. My house was built in the 90s. The air conditioning goes out. We have a home warranty with one of your competitors who bought the house last year.
Hopefully it's a good story.
Okay, they come out, $75, great. They think there's, something wrong, the fan's not turning or something, and they go, we're gonna take it back, the fan's too old to replace, so we're gonna have to get a whole new unit. Okay, fine. That wasn't the expensive part, and they would have covered that. Because it's an older home, all the ducting was not to code, and we were gonna have to change all of that, and that got really expensive. Is there any prevention on that sort of thing? I've had that happen before, like on plumbing issues.
Yeah, so again, it's all about reading the policy that you're either purchasing for yourself or for your buyer. Because again, like you have a copy of our warranty plan in front of you. Ours is very, very specific. It specifies what is covered, what's not covered, and there's also different tiers. Just like in homeowners insurance, you can get different levels of coverage. So again, if you go to the coup d'etat and you say, I want the best of the best, it's going to spell out to you everything that is covered. There may be some additional coverages that would cover that, the Pelham and of course the ductwork and things like that. So there would be possibly some stuff that's available for you, but again, it's based on, again, what package you choose, typically with whatever home warranty you choose as well too. But it's always advisable, know your plan, know your coverage, so in that way you're not shocked when only a certain part of it is covered, because it is unfortunate, because they can get very expensive with some of that stuff. Like you said, older homes, they're not getting any younger. So unless that stuff gets swapped out, changed, and corrected, then unfortunately it could be undersized or just not working properly and stuff like that. Let's save some questions to the very end, because we definitely need to go through some more slides here.
Thank you, Keith.
Thank you for the time, though. Thank you for remembering I'm over here.
Yes, we have about 15 minutes left, team. We're in sudden death mode. We're about halfway through our presentation, so try to keep it concise and save questions for the end. Thank you.
Absolutely, right? Time is one of the most precious commodities that we have. We can't save it, we can't hide it, we can't take it to the bank, so I'm gonna go ahead and respect that.
Yeah.
So I think I was clear on no clearance as far as title. So title insurance, believe me, it's just fantastic when you have the luxury of telling the buyer or the seller that everything will be taken care of. We are like the IRS, we do hold the records 5 to 7 years depending, but we will be there for you. And absolutely, please know there will be no sale, no recording. So keep that in mind. And you also want to take note of what attorney suggests, which is our best practices. Understanding our role, once in a while, we do get a phone call and says, what's going on, what's happening? We are the third neutral party. We follow everybody's instructions. So please have your directive ready because we will expedite. We do want to make it happen for you. We want to inspect what we expect, especially it is a contract. We do want to honor the close of escrow. And we can never over-communicate, right? They say communication makes the roads go round. So over-communicate, and always disclose.
Beautiful. Thank you, Elizabeth. On to an ugly topic, lender forced insurance policies. This stuff happens, yeah, when you have a loan and you are always going to be required to have a hazard insurance policy, whether it's a condo or a single family unit. And if you are lucky enough to be in a flood zone, then you will also be required to have a flood policy. If these things are canceled willfully, or if they lapse without payment, or if they deemed insufficient, and I'm sure Michelle can help us understand what an insufficient policy might be, then the lender will force a policy, and it's part of your paperwork. They will have their own insurance policy, which is not all of that. Yeah, it's not that great. The rate's not that, it's going to be not horribly high, but it's pretty darn high. And you're going to want to get rid of that thing as soon as possible. So I think that they probably would make more money if they just offered good insurance policies in these cases. But so that's what happens. And so it is no longer required when the loan is paid in full. And I have a short horror story for you. My wife's colleague over at Apple inherited a house along with a mortgage that went along with it, and this person just hate debt and just paid this thing through the nose for years until it was all paid. Had no more money left afterwards, wanted to try to save a little bit more, canceled its insurance policy. He lived up in Paradise, California, and his house is gone now. So horror story, he's living on friends' couches and stuff like that for the time being. Do you need a homeowner's policy if you do not have a loan? No. But I would recommend it. Thank you. Back to you, Michelle.
All right, so with earthquake and flood insurance, the earthquake, just remember that there's the California Earthquake Authority. They only work with participating carriers. There's also private carriers, okay? So don't just think that the California Earthquake Authority is the only one. There is other ones like GeoVera and Polymer and whatnot. So do your homework, and you've got to really understand where you live. If you live in San Francisco, you're going to topple with everybody. So maybe it's worth it to look into earthquake. If you live on a fault line, look into it. But, you just have to do the comparison between the California Earthquake Authority and the private carriers. Now, there are standard and comprehensive policies out there. So standard's very basic. They have the line items just like your home insurance. They will pay out for the dwelling. They'll pay out specifically for the personal property. But when you look at a comprehensive, what they do is they take all the line items, roll it into one big coverage, and you can use it however you need to use it. If you need more in the dwelling, you use it there. If you need more in the personal property, you use it there. Okay? There's two different types. And the dwelling coverage is always based upon your home insurance policy. Okay? So if your home insurance policy says $650, your earthquake insurance is going to say $650. Okay? They're always going to look towards the home because they're considered almost a companion policy. Okay? They work hand in hand with one another. Now, flood insurance, the ones that are required by the lender, is usually your A and V zone. Okay? I know some of you guys work in Milpitas. Yeah, that whole thing is like almost a flood zone. Okay? There's Santa Clara, San Jose. There's parts that are all along the creek. Right? There's flood insurance. There's FEMA written, which is done by the government, right? All those rates are extremely expensive at $3,000, $4,000. there's private flood carriers. I don't know if many of you guys understand that there is private flood carriers out there. So the other day, I quoted out some company for a Milpitas property. It was about $500. Okay, $500 for the lender's requirements at $250 or $250,000 with a $5,000 deductible. It's only about $500. So do your research. There is products out there. So there's FEMA or private. There are only probably 1 or 2 carriers or lenders actually that really want you to get FEMA policy. But your Wells Fargo, your Chase, your Cities, all those guys are fine with the private because the private actually covers more than a FEMA policy. Okay, like one example, quick example is if I flood in a FEMA policy, right, I need my neighbors to be flooded with me in order to claim.
Whoa.
So then you go and water your neighbors with your hose, right, and then get them flooded, right? In a private situation, because it's a private company writing it, they say if you're flooded by yourself, right, we will call that a flood, right? So you want to look at these policies and understand when does a claim happen, right? And then the dwelling coverage is, again, based upon your home insurance, right? We will look at 2 things. One is the replacement cost of your house. FEMA will only take, they'll look at the replacement, but then their highest coverage is $250,000. That's why lenders are at $250,000, okay? Private companies can actually go all the way up to the replacement cost of your house. But typically, on a home, most people will get flooded on their first floor. So the damages only typically occur on the first floor, not necessarily the highest floor. Yeah.
A question about earthquake insurance.
Can we save it to the end, please?
Oh,
We've only got a
that's
couple
the
minutes left.
question.
Yeah, thank you.
So, anyways,
So, yeah, we got 5 minutes on the clock, Keith.
All right, speaking about flooding, who likes plumbing? Plumbing in your house, right? 1930s, that's when it started becoming very popular. You didn't have to go out to the outhouse, middle of the night, get bit by snakes or whatever. So now you get to enjoy having your toilet inside your house. So it's fantastic. So that's actually our #1 claim year after year is some kind of plumbing, whether it's water heater, some pipe that's leaking, something like that. So who are you going to call if you do, all of a sudden your water heater bursts, floods part of your house, floods part of your garage? Who are you going to call? Who's going to take care of that damage for you? Yeah, besides Ghostbusters. Yeah, Ghostbusters doesn't take care of water heaters. All right, so you possibly have 2 insurance products or the service contract. The home warranty should take care of the water heater, right? The actual component that broke down. And then possibly your homeowner's insurance, depending on, again, what the damage caused, that's going to take care of that. So they work hand in hand, and they don't really do the exact same thing. So they're basically, again, 2 things that you should definitely have for product that or a home that's either owned free and clear, without a loan, or with a loan for sure, so you help protect your asset.
Keith, beautiful. Flood insurance facts and myth. Michelle, 60 seconds on the clock.
okay, the only thing I'm going to tell you, most flooding claims actually do not come from the special flood zone. They actually come outside of people who live outside of the special flood zones.
Interesting.
Beautiful. Thank you. That was quick. Wow. Innovative tools. Elizabeth, title tools.
Because everybody will have a different journey in real estate, definitely not a walk in the park. You want to take every single milestone in your career, and there is a lot of resources available for you. Because of lack of time, I'm happy to customize a great business plan
Yes.
alongside with whatever your goals may be. You probably are thinking, Elizabeth, I already forgot 90% of what you said. Please remember, read your preliminary reports. Very important, and as Michelle suggested, the CCNRs. And there is a science to farming. You don't want to just spray and pray. You want to be strategic when you're farming.
Word to the wise. Thank you, Elizabeth.
Oh, one more thing that's very important. Wire fraud. This is very
Yes.
serious.
Yes.
Even EMDs, please highlight that to your sellers, to your buyers, because the FBI can't even catch these guys. So after 10 minutes, we don't know what happens in cyberspace.
A quick thing on all the different types of insurance policies. Do lenders look at all of them? Lenders will only look and include the debt, the liability of insurance policies if it is required to maintain and own a particular place. So hazard insurance policies, flood policies, PMI, condo, interior, and masters. All the other type of insurance policies, the umbrellas, the pet insurance, San Ricardo's trying to get gun liability insurance for everybody right now. There's going to be so many different kind of insurance policies out there. We don't look at everything. We just look at what's related to the house. Keith?
Oh, I'm going to talk about pet insurance real quick. All right, so we can go through these really fast. Okay, so again, water heaters, obviously, how many of you have to put on your contract the water heater is going to convey? Who takes their water heater with them when they leave the house? Nobody, right? Okay, except for you. All right, go ahead and press play. Go to the next one. Who knows what kind of pipe this is right here?
A black pipe.
It's called Orangeburg. Does anybody know what Orangeburg is? Okay, so this was used post-World War II. It's basically tar paper. This was used to do building for our sewer lines. Usually it was originally designed actually to house electrical cables, but they thought, hey, this would be fantastic to use to get the sewage out of our houses. Let's see what that pipe looks like after it's been in the ground for years. Okay, so Orangeburg, unfortunately, as a paper product would normally do, is it erodes, decays, and it actually starts to crumple and collapse on itself over time. So that's not so good. But you will come across homes, especially in the Bay Area, that were built with Orangeburg property or Orangeburg pipes. So just be careful of that. All right, go to the next one. What are you doing? You broke it. You need a warranty for that. All right, so
to get one.
Okay, so here's a traditional like ABS and thank you, and a hub connector for your sewer line. But let me show you the next one. What's inside that? Okay, look at this. This is roots.
That's deep roots right
Yeah,
there.
and you can believe, this was actually a functioning pipe for years, right? And that's what happens is that these plants and shrubs and trees like to get in there. It's good. And they just drink that delicious water. It's delicious. And then, of course, you have to have a plumber come out there, whether it's a roto-rooter, and then they have to actually, if they can, they'll root it out, get that stoppage taken care of, or they break it open like they broke this one.
Thank you, Keith.
All right, you're welcome. I guess
Look at us. Thank you, everybody. Did you guys have a good time today?
Plumbing.
All right, so in front of you, there should be a survey form. We would really appreciate it if you guys can fill that out and leave it before you leave. And thank you so much for our great panel today. And moderator, make it so fun. I have an announcement for the next Brunch and Learn. It is coming up September 20th. Once again, we have breakfast and brunch, and it's free event, so make sure you're registered online, and it's about